We talk about like AI as like a big disruptor to like the big companies and this and that, but AI may be the biggest disruptor to VC.
Big time.
In the end.
Explain what you mean. I know what you mean, but I want the audience to understand
Let's just say you raise a $2 million seed round. In the past, what you would do, to your point, Jason, is you would hire 7 people at $200,000 each, right? So now you have a $1.4 million burn. So you basically have, and let's just say you co-work someplace, you have a year and a half. And so you're pedal to the metal, right? You're basically trying to throw as much spaghetti against the wall as possible, see what sticks, buy as many ads, do whatever it takes. The money basically goes to AWS and Facebook and a couple of other companies, to Google. And then you hope that there's enough traction where somebody then writes you a $10 or $15 million Series A check. Now, if you take that same $2 million, you could have a 3-person team, 4-person team, half of them offshore, where they also use things like Copilot, which is like a 2 to 3x lever. Now, all of a sudden, they have the same 10-person team, and it costs $40,000.
Exactly.
And so now, all of a sudden, they have 4 years. So why wouldn't they do that where they would still own 80% of that company, and all of a sudden there is a potential to exit it for 50 million or 100 million, and they've made more money than in a traditional outcome if you sold it for 2 billion.
Precisely the case. This is literally what founders are modeling right now. They previously wanted to beat the record of the person in their cohort who raised the most money at the highest valuation. Now they're just like, how do I get to profitability? And how do I own as much of my company as possible? So Saks, you've got over $1 billion under management. You've been one of the most successful new venture firms in Silicon Valley in the last decade. You got a lot of cash you could deploy. How do you deploy it intelligently given the circumstance of people maybe raising less or being more efficient? And what do you think of the AI's impact on venture?
Well, the most important thing is to have opportunities to invest in. And the fact is that before this AI wave, the whole cloud, social, mobile wave had kind of petered out. I mean, the pond of opportunities had kind of been fished out. And AI is great because it restocks the pond. I mean, there is a lot of new ways for founders to use these advancements to solve problems that they weren't addressing before. So I think you guys are being a little too gloomy. I mean, I think that the impact on capital efficiency will take some time to play out, but I think that for the first time in a number of years, everything's feeling fresh again. And there's just, I think, a lot more opportunities for founders to go after now. It's like this at the beginning of any big new tech wave, right? This is a new platform opportunity. Same thing was true with the App Store when the iPhone launched. Same thing was true when the internet launched. Now, I understand a lot of these opportunities are going to be taken by big companies that already exist, but there's always going to be an opportunity for founders when you have a big disruption.
David, I agree with you. My comment is less about the pond. I agree with you that the pond is getting restocked. My comment is that the economic impact of AI is so massively deflationary. It may be an order or 2 orders of magnitude more deflationary than AWS was. And that was massively accretive to the startup economy. So if this is a 10xing or a 100xing of that economic impact, my only point is that the break-even threshold for a founder will have gone way down. And then as a result, it's only a matter of time until they can put 2 and 2 together in an Excel spreadsheet to figure out that owning 50% of a $100 million company is greater than owning 18% of, some other company when you're massively diluted, or 8% or whatever. It's just like, that's all I'm saying is like the effective break even goes way down in a world where AI proliferates. And I think that's positive.
What do you think of that? Yeah, Saks.
It's just positive for founders.
If you look at what founders do with the money when we invest in a Series A or B, the number one thing is go to market, right? So they want to basically triple their sales. Let's say they want to grow from 5 million of ARR to 15 million of ARR. They have to staff up the quota capacity to hit that number. And, for every AE, you're going to need some number of SDR, some sort of management. You're going to need some sort of operations overhead. So you've got to hire all of that. And then they want there to be a cushion in case they miss their numbers, right? Because there's no guarantee you're going to hit that. So, founders still need to raise the money to staff up to go after that opportunity. Now, does sales become more efficient over time because of AI or does lead gen? Yeah, I think that's possible. But in order for that to happen, you're going to need to see a rise in quota capacity, right? I mean, that's what we're talking about, is that same AE can now hit, a greater level of sales because they have better tooling. We're just not there yet. Maybe that happens over time. But I think, your
but
typical SaaS
it's
startup,
inevitable.
maybe it's inevitable, but I just think your typical SaaS startup right now is spending the money on more prosaic things.
Yeah. No, I think you're right. All I'm saying is I think what it means is that the $200 million fund today becomes 50. The $500 million fund needs to be 100, and the $1 billion fund needs to be 200. It's basically back to the future. It's like back to the 1990s style.
2012.
By the way, I'll show you a table here. Nick, I need you to blur out the names, okay? I just think it's super interesting. I walked Friedberg through this, but this was like a list of all these funds that I've invested in.
These are venture funds you've invested in.
These are all the venture funds I've invested in. If you look at this, what do you notice about like the mega funds that just clock out DPI? Look, this is a $100 million fund, right? Look at clocked it. This was a $220 million fund. My point in all of this is like, if I look at my returns as an LP, I've never had success when I've invested in big funds. I've only had success in small funds.
It's true that smaller funds do perform better and larger funds become more of an index and achieve more average returns. When you got a multi-billion-dollar fund, it's way harder to achieve a, outsized return. So, yeah, I agree with you. I think this dynamic would be healthy. I mean, our funds actually are not that big in the grand scheme of things.
It's definitely, the game is changing dynamically. And this podcast is going to be great in 2024 because we went from 4 capital allocators to 2 capital allocators, myself and Sachs, to 2 in the arena CEOs. So we're going to be having this discussion, I think, in a very granular way now that we got 2 players on the field, Sachs, that we can watch what they're doing.
Well, I've got a new incubation that's going to be launching soon.
Ooh.
But I'm not going to be CEO of it, but, I'm kind of executive chairman.
Is it a SaaS company?
Yeah, it's a SaaS company.
What kind of company is SaaS?
It's basically Yammer 2.0.
You have our attention. Wait, did you say Yammer 2.0?
Yeah.
I thought that was Slack. So this would
you got to say Yammer 3.0.
Okay, Yammer 3.0.
Yeah. Yammer 3.0.
Okay, let's go. We'll get a little, I think we had a push on call-in, so now we need to get our 50X on Yammer 3.0.
Yeah.
Give us a little tasty poo for your besties.
No, you're right. We sold call-in, so now, we've cleared the decks, and I can't work on multiple incubations. I can only work on one at a time.
Can you have your person that runs that SaaS Grid thing email me? Because I want to onboard my company into SaaS Grid.
Yeah, that I can. It's so good. Well, by the way, that was the last one. So I've done, I guess, 3 of these now. There's call-in, SaaS Grid. So SaaS Grid is now spun out completely of Craft. And the founder of SaaS Grid was our VP of analytics at Craft, and now he's going full-time to SaaS Grid. So I think it's going to be very successful.
But can I get onboarded and can I get a friends and family discount?
Yeah,
let's explain this concept to the audience since it's unique in the world, and we should maybe double-click on the economics, not on a specific company, Sachs, but just generally of why VCs are doing this. You're incubating a company, you're a former founder, you have that itch, you have ideas. So instead of investing in a company, you say, hey, let's all get to the office. I have an idea. Let's make this ourselves as Craft. And then we'll put some of Craft's LP's money into it. And then there's some slug of capital saved for the new team that comes. So how does the economics on something like this work? And why do LPs love it, or do they love it? And then why is it good for your internal team or for you to incubate a company as opposed to just fund them?
Well, when I first set up Craft, we actually wrote into our LPA that we had the ability to incubate companies, and we had a prearranged economic deal with our LPs on those incubations because I didn't want it to come up later. And then there's some conflict of interest between the management company and the LPs. So it's a predetermined deal. And we don't do a lot of these. Like I said, I guess there's been 3. There's been SaaS Grid, call-in, and now this Yammer 3.0 we're talking about. But really, I got to give the credit for SaaS Grid to our VP of analytics, who really, I think, pushed this idea. And it started with a simple way for us to analyze deals and dashboard deals. It started as a spreadsheet that we would give founders that would crank out their charts. And then we turned it into a website that was free. And then
you needed it as an investor, right? You needed it as an investor to have these insights. Investor.
And then what happened is that we saw founders started using SaaS Grid as their dashboard to manage their companies between funding rounds. And we're like, oh,
Interesting.
okay, that's a big aha moment.